at Pinnacle, executing the Opportunity Zone legislation requires the investment of a long or short-term capital gain from any source. So you could sell low basis stock, you could sell your primary residence, an investment property, you could sell crypto, or generate carried interest as at your venture or private equity firm. Any source the IRS designates as a realized capital gain qualify for these extraordinary tax benefits. We won't go into great detail on the tax benefits. Suffice it to say, it's a tax shield. So if one is considering strategies maybe to reduce concentration, to obtain diversification, of course, our partnership has led to this sort of pair trade of your sophisticated strategies to call or hedge or other option strategies, derive a capital gain, plan sale, reduce that concentration, and then allocate to real estate and use the tax shield as that gateway to do so in a tax efficient manner, not only with the incoming gain, but ultimately, as we know, there's tax elimination associated with opportunity zone investments. So maybe talk about some of those discrete strategies you advise your clients if they have, as an example, Nvidia stock, they're an employee or maybe a long-term investor.
Right. It's been a conversation we've been having a lot. And Nvidia, I think, is one of the great American stories, and it's certainly been one that has come up upon us pretty quick. So I think a number of our clients have been very excited, but also a little bit nervous, where they like what they see when they open up their portfolio. So it begins to kind of, in our belief, there is never an all or nothing conversation. There's never a point that you look back and say, well, this is the absolute time to sell. And that's really where that conversation starts, is what that is helping to derive what that runway is going to look like. And to help clients, as we say, get from point A to point H, which is to go from a portfolio that is solely one concentration or a primary concentration of a one stock, whether it be Nvidia, Google, Amazon, and predominantly a lot of the names that are located geographically in our area, but really across the country. There's been a lot of great performing names, and we look at this as a challenge, right? Where how do you go from that point A to point H? And we call that point H because it's not meant to be the end of life, the end of retirement. It's just meant to be a stepping stone into what's next, to help clients get from that concentration in what we call a destination portfolio, or a portfolio that's built and designed that has your needs in mind, that has the return characteristics and the risk characteristics that clients are comfortable with staying with for the longer term. It's always a stepping stone to get there, but the way that we typically will work with clients is to help them build out a multi-year strategy for taking advantage of what's right in front of them. It could be tax benefits, it could be an attractive price for an exit on their stock, but helping to make sense of that really in a three-dimensional picture, so that how do we know what a good price is to potentially exit that position? And then most importantly is simply that we don't think it's a good idea to just simply exit a position, go into cash with a large tax liability. So being able to help create that destination portfolio is a big start, and it's a very important conversation. But as we kind of look and go into that a little bit deeper, right? Does it make sense to go from a name like Nvidia, which is jockeying for position for the top spot in market cap between Microsoft and sometimes Apple? Does it make sense to go from an S&P 500 stock back to the S&P 500 to try to achieve diversification? It certainly didn't work very well through February through April. So what our belief typically is to consider that initial step to that destination portfolio, looking at non-correlated assets, looking at investments that not only have a different risk parameter to them, but that are sourcing their returns from something that doesn't require the market to do one thing or another.